What's up team, hope everyone's good. Welcome back to another weekly analysis video. So in this week there's not been too much action. First week of December, we've got NFP on Friday, so generally the higher time frames of the market don't tend to do too much in the first week of each month, especially in December. So nothing much has happened on the swings. We had a day trade which we hit TP1 and TP2 to make 1.83% total from TP1 TP2. The final 25% of the positions just ran to hit BE. There was a re-entry there, but I decided not to take it because I've got an emotional bias based on having just won from that position. So we safely just secured 1.83% from that, and the rest went on to hit BE. No problem at all. It's literally the opposite of a loss. It's literally a win. So that's nothing to be concerned about. We decided to cut a Euro JPY trade short at 0.5%, and then we'll look for a deeper re-entry, as you'll see later on in this video. So total change this week is just minus 0.5%, pretty much just break even. Nothing's really happened in terms of close trades. We've got a sea of blues in terms of open positions. No drawdown at all, pretty much. So let's get into the video. So Aussie JPY, again, we're just waiting for this one to push higher. It's this position that we're looking at. We've hit the first two take profits, just waiting for that third and final take profit. In the meantime, we have another trend on this. So we've got one touch, two touch, looking for the third touch. The 3 days been supported pretty well. We've got a whole load of support there, whole load of support there, support there, support there, support there, support there. So yep, we're just looking for the 3-day EMA to act as support in conjunction with the trend line, in conjunction with this previous area of resistance. We're looking for that to now act as support at the quarters level of 95.25, which is also within our golden fib zone of this significant low to this significant high. So in terms of confluences, let's write them out. We've got third touch of trend line. Let's spell that properly. We've got EMA support, which has been respected. We've got previous structure. We've got a quarters level. We've got the Fibonacci golden zones. And then what we'll wait for is we'll wait for the wick candlestick rejections. Like I say, very important that you don't just put a buy limit there for price to hit that point, because we want it to arrive at the zone and provide candlestick rejections to sort of confirm to us that the market is looking to take this area as a turning point. So all that in conjunction with our top-down analysis, which is a bit too long to get into on this video, but in the VIP it's covered. So all that gives us 7 confluences to take this trade. So we'll wait to see if we get those candlestick rejections. I've got my alert near the zone, the 61, and then we'll wait to see how that one reacts. This one was also providing a good entry on the 2-day. As you can see, same case with the EMA, but I've decided to play it a little bit more reserved, use the lower EMA as they're pretty much the same. But what you'll notice is with this EMA, you have some big spikes beneath it, whereas the spikes beneath on the 3-day aren't as much. So it's much safer to assume that it's going to tap the 3-day EMA than to try play off a deeper retracement through the 2-day. So here we're choosing to use the 3-day time frame. As I've covered before, the 3-day time frame, the 2-day time frame, and the daily, they are pretty much just the daily time frame. You're just manipulating the fact that we can use 150 EMA, and then when you view it on the 2-day, you're seeing a 100 EMA. and then on the 3-day you're seeing a 150 daily EMA. Okay, so these time frames, it's essentially the same as just looking at it on the daily time frame. But if I just show you, if I create a 150-day EMA and turn that on, this black line is what we're looking at on the 3-day time frame. Okay, so we can have that displayed with the 50 by just manipulating the multiples of the EMA with the time frame. So that's why we use those different daily time frames there. On to the next pair. We've got CAD Swiss on the weekly. This one's selling off nicely. We've hit the first take profit. We've been catching day trades on the smaller time frame on the way down, just waiting for this one to hit TP2. Price, now that this low's been wiped out, we'll wait to see whether price retraces up to come back down or whether it just goes straight back down. So this one's just still playing out. CAD JPY, this one's ranging now. So we had this area which was broken. We took a trade here based on 1 touch, 2 touch, 3rd touch. The EMA was being used as support. We had a significant fib level, I think it was this low maybe, round about that region, maybe one of these lows. Yeah, so we had 1 touch, 2 touch, 3rd touch, EMA being used as support, price coming into a significant fib level where price was previously structure. So you see this area of support, this area of resistance. Let me put a line on there. So you see there was resistance, support, loads of support there. And then lo and behold, price was within a key area to be used as support again. I think this was at the site level 105. Yep, that's where we got the entry. Waited for the significant wick rejections. So we had a 12-hour doji there, which was enough for us to enter on the daily. Price wicked below but couldn't close below our entry level, and then we rode price higher. We've took 1 take profit at this high, 2nd take profit at that level. Let me make it clearer now. And now we've just got 25% of the position running to hit the final take profit. In the meantime, we could be looking for re-entries, but for me, prices double topped now, triple topped even at these previous highs. I did have a day trade or a stacked position trading off this EMA again, but if you've been following, you'll know that hit break even. So I'm not looking to get back in another buy. One reason based off emotional bias, it would kind of be revenge trading to try and avenge the previous position that was stopped at break even. So good to be aware of that and stay out of the market. And the market's pretty much just ranging sideways here. This isn't a trend, okay? This is not, although the overall price is in an uptrend, this is sort of ranging here. We're just moving sideways probably till year end. So I'm just leaving this initial position open. If we can hit TP3, great, but I'm not really too inclined to start looking for stack trades on this. Euro Aussie dollar, pretty similar situation where we've hit a previous high and price is just moving sideways now. We've actually broke the original trend, which was a reason for entry. We broke the EMA support. We've hit the first 2 take profits, so we hit TP1 for 2.5R, we hit TP2 for 3.3R. So we're just leaving 25% running to hit TP3. I think price is just going to grab more liquidity, maybe off this low before having to push higher. But our stops are at break even. What does that mean? It means that worst case scenario, price comes back down and we make 0%, which is professional risk management. Moving on to Euro Swiss. This one has had a great week. Updating on last time. So we had 1 touch, 2 touch. We treat this as a sort of cluster of touches since it happened so fast, but I guess you could say this is the fourth touch. But anyway, within this downtrend, we've analysed that the 3-day EMA or the 150 daily EMA was our resistance region. So we looked for the area where this EMA and this trend line were meeting. I looked for an area above the golden zone, just based on where price was moving, really. Looking at the EMA and the trend line, obviously it lined up a lot further above this zone. So yeah, I felt I could take a higher entry on this. These highs were also previous structure, and you'll notice that price lined up well at the quarters level, so a multiple of 50 pips was in line with those highs. Previous support elsewhere as well. So yeah, go check a couple of weeks back when I called this level. This signal was given away on YouTube for absolute free. So there's no reason why, if you was watching, you couldn't have took this trade as well. We had this significant candlestick rejection as price came up to our zone. It sort of moved sideways. It gave us a 3-day shooting star, gave us a 3-day doji, and then we entered off those highs after 9650. Price whipped above, came back down. Then we had a sort of tweezer top, and then price dumped off down to here. In total, this will be about a 7-hour trade. We are currently 3.6 hour into the trade. So I just got my alerts for when this hits TP1. This will be a nice trade. Euro JPY. So we said on the daily we were looking for a position, and we entered. We had all the reasons to enter. So we had 1 touch here, 2 touch there, 3rd touch. We had the EMA was being used as support. We had this high was our resistance that we looked to enter. We had a daily doji. So we had all the right signs. I think my stop would have been like down here. Yeah, so the stop loss would have been hit by now, but I actually called out, let me get the exact position. So it would have been this low to this high. Stops would have been down here. So the stop loss wouldn't have been hit yet, but I've called it earlier this morning to the VIP group and said, let's cut this one out at 0.5%. The daily candle did not respect the trend. It did not respect the EMA. Therefore, a lot of our reasons for entering the trade are now invalid. I think price is going to take a deeper retracement down to the 2-day or even the 3-day. So we've cut that trade short at 0.5%. That's the beauty of swing trading, is that you have more time to sort of see if your confluences aren't now acting as true. So you can get out of your trades early. So when you can cut your losses from -1 to 0.5, you're essentially halving your losses, do you know? So this trade, although it had all the right confluences, it had the right entry criteria, we took a loss, but using smart risk management and just experience in the markets, we've managed to halve the loss that we took. I still think this is a bullish pair. Euro JPY has been very bullish recently. If you see this huge run up there, I think it's just cooling off, grabbing more liquidity. I think the 100-day EMA or the 2-day 50 EMA is going to act as support in line with the 3rd touch of this trend. It's a much stronger area in the market, 158. So we've got resistance, whole lot of resistance there, and then it came up, acted as support once, bounced off. I think it's going to act as support again. We'll obviously look for the candlestick rejections before then. We've already got one very solid daily pin bar. So we'll see how price reacts as it comes down to this level, and then look to take another buy off of this zone. So if I just pop on the fib again, I think it's from this low to this high. Yep. So price 10% below this low. Stop loss 10% below this low. Take profit 1, take profit 2, take profit 3. we'll take 50% there, 25 there, 25 there. I'll just lower this back to the line. And here we're looking for around about a 4.15 R trade. Pound Swiss, I feel like this one's going to shoot down any day now. This pair is about 75% correlated with Euro Swiss. So the fact that Euro Swiss has had this dump and is near its low, Pound Swiss should, in theory, follow suit. So it's just a waiting game. This one was called out on before the 14th of November, so 2 or 3 weeks ago. Go check that out. We had 1 touch, 2 touch, looked for the 3rd touch. We had this EMA being used as support. We had this beautiful zone of previous support, which price fell through, and now we looked for it to act as resistance, which looks like it is. Price hasn't closed above our level, which is the quarters level of 1.1125. So it's tried a few times. We actually had a very pinpoint perfect entry there. If you see that, that was the level we called out, tapped us to the pip, shot off, retested it, couldn't close above, and is now dumping off again. So I think we'll see a similar situation to Euro Swiss on Pound Swiss, just a matter of time. But the trend line is held strong, the EMA is held strong, and this previous support region is currently holding strong. Every time prices come up, we've had a shooting star, and we've had a tweezer top. So just waiting for price to fall down here. I'll alert the VIP group when our stop loss to break even level gets hit. But for now, we're just waiting. But this will be a nice 4.45 R trade. New Zealand JPY. This one hit TP2 last week. We made 2.25 R TP1, and we made about 3 R TP2. So just waiting for it to come up to TP3. Might take some time now. I'm eyeing up this touch in line with the EMA. 2-day, 3-day EMA looks pretty nice, pretty similar to Aussie JPY. Obviously, they're very highly correlated. But we'll just wait to see if this is looking like a good re-entry. Not thinking about it too much because obviously it's quite far away, but for now we're just waiting to see whether this one carries on up to TP3, or is it going to come down and give us a re-entry opportunity to trade higher. Euro Swiss on the weekly. So we had, give you some top-down analysis insight. So we had this uptrend around 2019. This broke out. So we had uptrend, breakout. Then we had a retracement from 2021 to 2022, end of 2022. This is now broke out. Okay, so this is what we're looking to trade, is the continuation of that move following this breakout. So price broke out of this retracement. So just show you again, had a retracement, broke out, retested the breakout area, dumped off. Here's where we got our trade, and we're looking for it to just continue lower. So that's what we're trading at the moment. How do we get our entry? So 1 touch, 2 touch, 3rd touch. EMA that was used as resistance previously was again used as resistance. This trend line that was used as resistance was again used as resistance. This previous high, which is a previous resistance, was again used as resistance. We got the fib level from this significant weekly high to this significant weekly low, came up to the 78.6 level, which coincided with everything I've just mentioned before. Leading up to there, we had price break above, but then we had a tweezer top on the daily, which gave us reason to enter. We did. Price dumped, and now we're just waiting for our TP1 to be hit. But this is a nice weekly swing trade. It'll be 5-2R total. Just playing with the fundamentals of the market and the higher price movements in the market. We're currently sat about 2% up on this, so just waiting for it to keep falling further. But that's it for the open positions. Obviously, we've got 1, 2, 3, 4, 5, 6, 7, 8, 9 open swing positions. A lot of them are at break even at the moment, just waiting for extra profits to be hit. Coming towards the end of the year now, we might see one final push for the week. Obviously, you've got NFP end of the week, so that normally drives some movement in the markets. Probably one final push week, and then we'll just close for Christmas. As there's pretty much no institutions trading through Christmas, the spreads are crazy, nothing really much happened, it's just ranging. So swing trading, I'm taking Christmas off from the second week in December. We'll just see if the last final week does anything for our positions. If not, it's been a great year and a great end to the year as well. It's been pretty profitable. As you can see from the weekly delta update, so 0.5% this week since last week, but then before we had 1.6 and 2.5 total. So 2.5, that's about 4.1. We've done about 3.6% in the past month, which is pretty fine. Obviously, if you're trying to pass funded challenges, you might want to consider trading 2% at a time, but nowadays they don't even have time limits, so you are free to just trade 1%. Obviously, if you're making 3.6% a month, that is amazing anyway. The best hedge fund, Citadel, I think they made about 36% in 2022. So 36% a year is about 3% a month. You know, you don't need to make more than that, especially if you're trading large amounts of funded capital. It's all you need. Low risk trading, nice, slow paced. You can set your trades up, set your positions up, get on with your day. You know, set, forget, go and go live your life. Don't be sat glued to a screen 24/7 and scalping. So that can be achieved with this strategy. We've gone over one re-entry. Two re-entries. And 3 re-entries. So I've gave away the free positions that I'm looking to take on the free side of things. Obviously 1 touch, 2 touch, looking for the 3rd touch on NJ. Same on AJ. And then finally the 3rd one was Euro JPY. So this one we're looking for a deeper retracement here. Obviously we're very bullish on yen at the moment. Just so you guys know, it's important to check the correlations of your currency pairs. If at the time of entry, AJ, EJ and NJ are all like above 75% correlated, you may want to consider only taking 0.33% on each of them. Therefore, you're trading 1% on that idea. Because although they're separate trades, look at the graphs, guys, they're pretty correlated. If you were to put 1% on this, 1% on this, and 1% on this, and they're above 75% correlated, what you're basically doing is putting 3% on the table for one idea. That's not how we want to be trading. There's a reason casinos limit the bet sizes. It's because in a statistical model, it's not best to just throw everything and hope at one trade and hope that you get lucky. It's much better to place smaller bets of limited size across a large sample size than it is to gamble on one trade being better than another. So bear that in mind when you're trading correlated pairs. So notice that I've gave away 3 yen pairs, and just bear that in mind. You can use currency correlation tables online to figure that one out, and then this is the kind of information that I give away in the VIP group. So there's many layers and many fundamentals that you need to understand, not just placing lines on a graph. Okay, so if you want to find out more of them and also see all of the positions that I'm looking to enter, I've got 12 of them on the swings, and I've got a good 11 intraday trades, day trades that I'm looking at taking as well. So check the link below to see the subscription link for the VIP group, so you can get the premium analysis in the VIP side of things. And until then, I'll catch everyone next week.